Hi everyone, this is Mindy Stange with JP and Associates Realtors, and we have so many questions lately about what is the real estate market doing in this current climate that we're in with the pandemic. This is not 2008. It's not the same reasons that we're seeing things affect the market. So it's totally different, and we want to address some of those questions that you have today. And you cannot talk real estate market without talking about mortgage. And today I have Jeff Cameron with CMG Financial, who is an expert in this field, and we're going to ask him some questions that have come up from a lot of my buyers and sellers and see what he can tell us about the mortgage market. Hi, Jeff. How are you?
Good morning. How are you?
I am great.
Good.
It was a busy weekend in real estate, so I'm happy about that.
Yeah, it really was.
So I just want to start out by asking, what has the pandemic changed as far as just qualifying for a loan?
Yeah, so what's it's kind of done is that it's made a lot of the investors start to get a little more strict on things, and they feel like certain loans, like government loans, like FHA, VA loans, are a little more riskier because those clients are putting down less money. So what they've done is they've, a lot of times they've increased the credit score requirements. So, it used to be most lenders went down to either 580 or 620 on those type of loans. And, we're seeing pretty much daily lenders are changing their requirements to 640, 660. We've seen a lot of major banks, go all the way to 700 requirement just to even do a loan now. So that's really the main thing. And then, it kind of went from, let me give an example. So before COVID, you might have been able to get a rate on an FHA loan at 3.25. And then the very next day, as the investors were getting more strict, you might have to pay, a discount point, or maybe 1.5 discount points for that same rate, just because they feel like those loans are a little more risky. So, on a $200,000 loan amount, and you weren't paying any discount points for a 3.25 rate, the next day you might have been paying, $3,500 for it. So it's been quite a change in the market just as far as the rates and stuff goes. And even like down payment assistance programs, a lot of lenders have stopped doing those as well, just because they're mostly associated with FHA and VA,
Right.
rates. So, and they just feel they're more risky, and they're afraid that people are going to put those loans in forbearance, pretty much as soon as you close. And when you do that, then the investor has to, buy the loan back. So they're really not wanting to, do a lot of the riskier loans right now. So conventional really is, we have really great rates with conventional loans. That's kind of the way most people are leaning towards, because it's cheaper as far as the rates go to do a conventional loan. That's the main thing we're seeing.
I definitely agree with you. As far as my sellers, we're getting offers that are mostly conventional, and the buyers that I'm working with are conventional right now. So yeah, the forbearance is crazy. I saw a statistic about 2 weeks ago that I shared with the listeners that 2.9 million Americans applied for forbearance. So I can certainly see where banks are concerned about those numbers. So okay, well, what can you tell us about rates as we head into the summer? This is really supposed to be our busiest time, and this weekend I felt like, oh, this is really what spring and summer is supposed to feel like, but it really slowed down the beginning of the spring market when we were all kind of just shut down. So now that people are ready to get back in, if they plan to move in June, they have a new school that the kids are starting, or a new job, like we normally see, what can we tell clients to expect as far as rates go when we head into the summer months?
Yeah, so right now it looks like the rates are still going to stay low. You can normally figure out that if the market is not doing so great, which we're kind of in that right now, then the rates will stay pretty low. So I don't see things, just jumping back, as far as the economy goes, that quickly. So I think we're going to see rates stay pretty low, just to make sure that people are still buying, this summer. And I can already see a big increase just in the last 10 days as far as applications go. During that 30-day kind of period, we went from getting, several loan applications a week to maybe 1 to 2 per week for that 4-week period. And we've, I think, received 28 applications just in the last 10 days. So it's really picked up quite a bit. So I think people are getting back out there and buying again.
Wow, that's great to hear. Yeah, I agree. I feel the same, and that's great to hear that that rates are going to stay low because they're at an all-time low.
Yeah, we love that.
Yeah, and when you said when the market's not doing well, are you referring to the stock market? If that's
Yeah,
not
really
doing well?
anything. So you can kind of look at, what's happened as far as like spending goes. Think about people are not out spending really right now, and
Right.
they're not even able to get out really in the malls. So, that's kind of what we look at as far as that part goes, the spending, the unemployment. Unemployment continues to rise. That's a big one. New home sales is a big one. As things tend to go down, I think that the rates will continue to stay down.
Okay. And I'll just kind of go into that next when we're talking about builders, as a matter of fact. I mean, in San Antonio, we have so much building going on and so much growth that, builders typically have spec homes. They've got an inventory of those all the time. Now they're throwing these big incentives on those homes. So what are you seeing in terms of incentives, and what incentives does CMG offer as well to
Yes,
buyers?
we've really acquired a lot of loans in the last, couple weeks that are actually from the new home builders, because those lenders especially have been tightening their guidelines. I think they went from 580, some to 640, some to 660. So with CMG Financial that I work for currently, we still get onto a 580 credit score on both FHA and VA loans. So, we've actually taken quite a few new loan applications just from those builders. So we're still able to do the loans that they can't do. We also do a lot of their turn downs, that the loans that they just, they're a little more strict on their in-house lending. But as of right now, we're taking a lot of applications from people, with the new home builders. And they, like you said, they're given tons of incentives. I've seen some $8,000 to $10,000 we given towards closing cost and buying the rate down. There is one program actually that CMG does that I have not seen anybody else do, and it's called Home Fund It. And it's kind of like a GoFundMe account. So we set you up with a counselor, and they set you up as I think it's called crowdsourcing. So what they do is they put it on your Facebook, and then your friends and family, they can contribute towards your down payment and closing cost without having to, do the normal runaround of actually verifying, that came through a bank account or anything like that. So now this is tied to only conventional loans. It can't be with FHA or VA, but it's been a pretty popular loan program so far.
Wow, that reminds me, just as you say that, last night we celebrated a friend's, 1-year-old, her daughter turned 1, and we're all on the Zoom call. It was crazy. And they also announced that they're having a baby boy, and I know that, they're starting to grow out of their house. And so, we can't go to birthday parties right now. We can't go to baby showers, or, I mean, sadly enough, yeah, I mean, I even did like a funeral at this time online. And
Okay.
so, but those things like babies and all these holidays, and so many people with birthdays, how great would that be? Instead of, yeah, hey, you can't come to the party, we're not spending money this way, nobody has to travel to see me, but if you can contribute to my home fund it, that would be great. And so that is a really good idea that could
Right. It's
work.
kind of like, instead of having a housewarming party with a gift, can you just give me the money a little bit ahead of time?
Exactly. I love it. I love it. All right, that's good. I'm glad to hear about that. What about, kind of speaking about different loan programs, you talked a little bit about the down payment assistance program, and I know that I've seen a lot this year. And so what are happening with those loans? What are some of the loan programs that CMG offers? I think you and I talked last week. We had a client that she was so close in qualifying, but we were concerned that we didn't want to push somebody in if they were just right on that margin,
Yeah.
just to wait a little bit until her credit was better and more down payment. And you're right, without us spending as much, our credit scores should be going up, or at least our debt to income ratio should be
Right.
going down, right?
Right. Yeah.
So that's what we hope for anyway on our credit cards. So tell me a little bit about that, loan programs, especially
Yeah.
for first-time home buyers.
So just real quick, I didn't really touch on yet, is one thing we kind of, quickly learned with the COVID is that anything that's a little more of a riskier type loan, those loans pretty much immediately went away. So Have you ever heard of like non-QM loans? Those are loans that, don't follow the regular guidelines like Fannie Mae, Freddie Mac, VA, FHA, stuff like that. Like bank statement loans, for instance, people that are not, they don't prove their income on tax returns. So
Right.
we would use bank statements. So those loan programs have pretty much went away for now. So, because they were a riskier type. We're thinking they'll probably come back in about 6 months once things start selling back down. But the down payment assistance programs, those also have had some changes. Daily we get a lot of emails on pretty much, watch what you're doing with the down payment assistance programs, because a lot of them have, like last week, for instance, on Monday, T-Shack, they changed their requirements to where if you don't have over a 700 credit score, your debt to income ratio has to be at a 45% or under. So that made a big change. A lot of our clients that do down payment assistance, they're typically in the 620 to 660 range.
Right.
So now we have to make sure that they know that you either need to pay off some debt to qualify for that house, or you need to go a little bit lower on the price, to do the FHA or VA. We've had several of those actually in the last week, and we've kind of had to scramble around and re-qualify them. Now TDHCA, that's another one that they're allowing a little higher debt to income ratios, but that's been the main thing, is just everybody tightening up on anything that's a little bit riskier right now.
Right. That's a good point. And I know that I've been encouraging any of my buyers that wanted, to get into the market and have their first home, is just talk with professionals like myself and you, and let's get a plan of action so that we can work on your credit, work on your debt to income, because they have more buying power when you've got interest rates as low as 3.2. That's a lot of buying power. They can buy more house than they could a year ago. So let's not let that opportunity slip through the cracks. Let's help you get in a position where 3 months, 6 months from now, you can utilize those great interest rates and get into your home. So
yeah, and and normally when you look at the down payment assistance program, they're normally a lot of times a point to a point and a half higher than your normal rates. But we're finding in the last couple of weeks is they've actually been pretty comparable. So for instance, a 3.25 rate on just a regular FHA loan, it's costing no points. It used to be on the down payment assistance program to where it would be, a point and a half higher. So maybe looking at a 4.75 rate, where now we're finding that you can still get up to 3% assistance, for a 3.25 rate. 3.625 rate gives you 4% assistance. So if you can fit in that category, it's a pretty good program right now. And the income limits have increased again this year. So, if you're making, 88,000 or less, a lot of times you can get into these programs.
oh, that's good to hear. We need to reward those people who are working hard to get into their home. All right. So what trend are you seeing as far as, like, you had mentioned the number of applications, but also just, how many of those are actually qualifying? And I know, like, a couple of weeks ago, I had an agent with an appraisal issue. Like, let's talk about that a little bit. So it's more, we're talking a lot about before the loan process, but let's talk about the actual, like, now you're purchasing a home. How is the loan process itself, once we're in escrow, being affected right now?
Yeah, so once you get you get your loan application in, you get pre-approved, which is pretty quick. We kind of go over the payments, and then you're out there, searching for a home. A couple things to remember is that lenders are still very weary of what's going on with COVID right now. Because many Americans are, either working from home, or some have hours cut, some are furloughed. So, right now, if you're furloughed, they pretty much look at that as unemployed right now, because you're not actually getting paychecks. So that's one thing to consider. So I'm kind of telling people, let's go ahead and do your pre-qualification now. And then once you're back and you have your 30 days of pay stub showing you're back at your job, then we'd be fine to get your final loan approval. During the process, though, they're going to be, a couple things have changed. The appraisal process has changed. So many of the loan programs are now allowing what they call an exterior only appraisal. So the appraiser goes out and does everything from the outside. So they're not going in anymore, taking all the pictures that they normally do. And then the buyer also has to agree to that. And, some loan types do not allow, like a cash out refinance. If the seller is saying that I don't want you in my home for whatever reason, we do allow the exterior only. If you have recently did an upgrade, though, you might want to do the interior, because you're pretty much wanting a little more value. So that's something that you want ask your agent about. And then towards the end of the qualifying, we used to do a quick verbal verification within 10 days of closing, just to make sure that you're still at your job. Well, now it's a little different. Within 3 days of closing, we're actually having to contact the employer and speak to management and just ask them, has COVID affected anything with this company? Has it affected our clients' hours? Anything like that. We just want to make sure that the client is okay to, whenever you do close on the loan, when the first of the month comes around, you're okay to make your first mortgage payment.
That makes a lot of sense.
Yeah.
Yes, and to note about the appraisers going inside is we did have one, and you're aware of this, and we ended up transferring it over to you. So I think it was conventional, so we could get another appraisal on it.
Yeah.
Is they did a what's called a desk appraisal, right? That's what they call it.
That's not appraisal, yeah.
They had done that on a home that was really remodeled, and it just, I mean, there's some homes that are in an older neighborhood and they are just so different because of things that a homeowner's done to them. And those are really important. So I think it's really important also for the listing agents to have, this is how I priced this home with the appraiser. I have one going out tomorrow to a house in Canyon Lake, and he was scheduling with me, and I said, hey, how familiar are you with the lake? Because I said, coming into the neighborhood, you have, $200,000 homes, and then right around the cove from her house, you've got $1 million homes. So he said, I'm familiar with the lake, but I will take whatever you can give me. And so certainly I want to make sure that I have that data for him to help him out and to help more so my client. So that we don't have an appraisal issue. And I'm so excited that he's actually going into the home, because it too is remodeled so much and it's beautiful, and I don't want that to be diminished in any way. So
yeah, and normally the appraisers, if you ever had talked to one, the first thing they normally will ask you when they're coming to your property is, have you done any recent upgrades? They kind of, and then they want proof of it. So they really want to kind of dig in and see what they can give as far as value. Whereas just an exterior or desktop appraisal, you really can't get the same overall quality, I feel like, because they're not actually inside the home to feel it, to see it, and to take the pictures of what's really been done.
Right.
And it makes your home stand out from the neighbors.
Exactly. I even have one that's coming on the market this weekend, and it's also been really remodeled. And so again, we asked for a list. Hey, give me a list of everything you've done and what you paid for it, so that we can help the value of the home. So great. And then, as we finish up here, just what advice can you give those who are contemplating, do I buy now or do I wait until this pandemic is over, whenever that will be? I mean, I know we don't have a crystal ball here, but, what is your advice to people when they say now or later, now or later?
Yeah, so we get a lot of people asking the same questions. I tell people that the credit reports are good for 120 days. So, in summertime, the market's hot. So you want to go ahead and get the pre-qualification done up front, figure out what your payments are, see how much you need for the down payment. That way you're ready. I mean, it just seems like I said, in the last 10 days, everything is really opened back up, getting back to somewhat normal. I think we're still going to be looking at, wearing the masks in the homes and stuff like that. But people are still buying. That's one thing that's for sure. So I would say just make sure you get everything pre-approved first, and then we should be just fine.
I agree. Well, yeah, and I always say, we're fortunate to be in Texas, where people like to come when there's a pandemic or any kind of economic crisis. And it's great that we're in San Antonio. We've got medical and military that, doesn't go anywhere when we have a crisis either economically. So thank you so much. I really appreciate your time. And again, any of those of you watching, we will have our contact information on the page, and we would love to help you get into your next home or sell your next home. So again, I'm Mindi Stange with JP & Associates, and this is Jeff Cameron with CMG Financial Services. Have a great day. Thanks, Jeff.
Bye, guys.